Have you ever felt FOMO as you watch friends celebrate Bitcoin's latest rally or drool over a six-figure NFT sale with memes, media stories, and influencers touting get-rich-quick potential? It's no wonder investors from college students to retirees are lured in. But ask yourself, when hype drives your decisions, are you investing or gambling? Digital assets went from niche curiosity to mainstream obsession in just a few years. Suddenly, even those who once parked money safely in fixed deposits or gold jewelry feel like they are missing out. Yet, beneath every success headline lies a trail of investors whose portfolios evaporated in volatile crashes. Isn't it worth passing to understand why this meteoric rises often collapse just as fast? Hi there, welcome back to the Holistic Investment.in, where we simplify personal finance for individual investors like you. So first, what we have is the cryptocurrency. Cryptocurrency is a double-edged sword. So imagine buying 1,000 rupee worth of Bitcoin in 2014 and seeing it balloon into over 3 crores today. Sounds like a fantasy come true, right? But for every Bitcoin millionaire, there are dozens who bought at the peak of a frenzy and watched their balances shrivel when the market tanked. First, extreme volatility. Have you noticed how a headline scream both Bitcoin hits new all-time high and crypto market plunges 20% overnight? Such wild swings can turn celebrations into panic in minutes. How would you feel if half of your portfolio vanished before breakfast? And number 2, lack of regulatory safeguards. In stock markets, regulators step in when fraud or market manipulation surfaces. In crypto, there is no such safety net. If an exchange is hacked or an issuer disappears, who do you call? Isn't the absence of oversight a red flag, not an invitation? And number 3, punitive tax regime. Did you know crypto gains in India face a flat 30% tax and 1% TDS with no relief for losses? In contrast, stock market losses can be offset against gains. Doesn't it seem unfair to punish both winners and losers so severely? Number 4, speculative valuation. Without earnings report or tangible assets, crypto prices rely on pure speculation. What fundamental basis tells you Bitcoin is worth its price? When hype fades, how do you know you're not left holding digital dust? Number 2, we have NFTs. So NFTs promise unique ownership of digital art, music, or even tweets. But ask yourself, does owning a token guarantee lasting value or just a headline? First, auction manipulation. Ever heard of wash trading? It's when the same parties trade back and forth to pump up prices, then exit, leaving genuine buyers stranded. Would you trust an art auction with no impartial bidders? Number 2, zero regulatory oversight. If a physical painting is stolen, you can involve police or insurers. If someone steals your NFT or clones it, where do you turn? Isn't the absence of clear legal recourse troubling? Number 3, tax and loss treatment. Like crypto, NFT profits get slapped with 30% tax and no loss carry forward. Do you really want your gains eaten by taxes while bearing full brunt of any loss? And number 4, intangible futures. When each NFT is advertised as one of a kind, how can you gauge its true demand? If the next big trend emerges, will your token still command interest or become yesterday's fad? So the third silent portfolio killer in the list is digital gold. So gold has long been a haven in uncertainty, but digital gold comes in 2 flavors, authorized and shady. First, SEBI regulated gold ETFs and funds is backed by physical gold bars. They have transparent pricing on exchanges and easily tradable at market hours. Number 2, we have unauthorized app-based schemes. So there is no clear custodian or audit trail, and stock exchanges and investment advisors warn against them. So there is potential for fraud if the platform collapses. Would you rather own gold you can't verify or invest in a regulated ETF where each unit represents a real audited bar far when convenience masks rich. Isn't wisdom to stick with what's transparent? So there are three ways to shield your capital. First, educate rigorously. Before you click buy, understand blockchain basics, the tokenomics of a project and tax implications. Hashtag DYOR isn't just a meme. It's your best defense. Number two, limit exposure. Treat speculative assets like crypto and NFTs as an entertainment budget, only what you can afford to lose. Would you bet your child's college fund on a Vegas game? Then why risk your retirement corpus? Number three, choose regulated channels. For gold, stick to SEBI approved ETFs and gold savings fund. For any tokenized asset, prefer platforms with clear compliance and custodial arrangements. Isn't it better to trade on a regulated exchange than an unknown app? So what is the final takeaway from this video? So blockchain technology holds promise, but excitement without education is a recipe for disaster. Before diving into crypto, NFTs, or any other unregulated digital gold product, pause and ask, can I survive a total loss? Do I understand how this market works? Or am I paying more in taxes than I expect to gain? Investing should be about informed decisions, not chasing headlines. By arming yourself with knowledge, capping speculative bets, and using only regulated products, you will protect your capital and maybe sleep better at night. And if you ever feel overwhelmed by the complexity of modern investments, remember, seeking advice from a certified financial planner can help you build a tailored strategy, safeguard your portfolio, and navigate risk with confidence. Are you ready to trade the hype for true financial strength? Then click the link in a description to register for a free consultation with one of our certified financial planners. And if you find this video valuable, give it a like, share, and subscribe to our YouTube channel. Until next time, thank you for watching.
And definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.